There is a 9-point curve on the multiple choice. Okay, there's no curve on the open-ended, and the reason for that is because you get to revise it. Okay, so all right. So enough about that. We're going to start cost management systems, chapter 19. So take out your papers. Let's start these notes. Okay. The reason why you need to understand manufacturing overhead is in this chapter we're going to allocate manufacturing overhead in a different way. Okay. We're going to allocate it to different departments. We're going to allocate it based on activities. And so you have to understand how we allocate that in order to do a sufficient job. Okay? All right, so in Chapter 17, we learned how to allocate MO from a most fundamental level, okay, baseline level. The problem with calculating this in Chapter 17 are that most accurate allocations can be made only when the total overhead costs have been incurred, which is not even known until the end of the year. Remember, when we're trying to put a predetermined overhead rate into place, we're putting that predetermined overhead rate in place as an estimate, okay? As an estimate, not as actual, okay? Managers need product information costs more timely. So if I'm going to make a decision about how products are done or how products are incurred, I need to have that done sooner than later. Okay? We only allocate MO to one product versus multiple products that might be produced. So that's a problem. If I make iPhones, okay, I might not have to put much work into that because I've done it for 7 years. Okay? Now that we make the iPad Air, we might have to put more work into it, which means we'll use more overhead. So I shouldn't be allocating the same manufacturing overhead to the iPad Air, which just came out a year ago, versus the iPhone that's been out for 8 years. Okay? So I'm going to have to allocate different amounts of manufacturing overhead. So companies need to find a different way of allocating overhead than what we've done in Chapter 17 and 18. And these are 3 ways that you're going to learn in this class, or in this chapter. One is the single plant-wide rate, which is the easiest. Okay, so it goes from simple to complex. Multiple department rates. And then finally, activity-based costing. Okay. Now, the key to understanding this is that if you don't understand the simplest form, you're probably not going to understand ABC, or activity-based. Okay? So stop me if you don't understand anything. Come and ask for help. Review the lectures. Okay? Because once we get to ABC, now we're in a total different ballgame. Okay? All right, so in Chapter 19, we're talking about a more real, practical, real-world experience. We're going to allocate MO over multiple products, okay? Different product lines. A great example of this is if you take a look at Toyota's factory. Toyota no longer makes, on a day, just one type of car. They don't just make Toyota Prius on the line, let's say in their Michigan plant. Okay. Today, what they're doing is they are producing a Toyota Prius, and right behind the Toyota Prius might be a Toyota Camry. Right behind the Toyota Camry might be a Toyota RAV4. On that same production line, they are making 7 different vehicles. They don't have to retool the factory to make those vehicles. You know, back when Henry Ford designed the assembly line, he could only make the Model T. If he wanted to make a different car, he had to stop the production line, retool everything, put different parts in place, and then start the whole process again. Today, we've now systematically made sure that we can produce any vehicle on that same line so that we don't have any downtime. But if we put more work into, let's say, the RAV4 versus the Prius, why are we allocating the same amount of manufacturing overhead to both when maybe the RAV4 takes a little bit more time to put together since it's a bigger car? That's the question. That's the problem. Okay? So let's assume this. The management team at Smart Touch Learning had compiled the following information regarding its expectations for the year. They expect that in this next year they're going to make 2,000 units of a standard model tablet. The direct material cost per unit is $150. The direct labor is $88 a unit. Now, what are three things that we need to have in every single manufacturing product cost? Direct labor, manufacturing overhead, direct materials. So that's what we have here, okay? It's right there, yes. Okay? Those are the three things. So, direct materials, direct labor, manufacturing overhead. So we're going to work with the single plant one. This is the easiest. Okay? This is the traditional method. And when I mean traditional method, I don't mean that it's used all the time. I mean this was the first way of trying to be more accurate. Okay? So when people started using this way of costing, they wanted to try to be more accurate. And this was the first way to be more accurate. Okay? So let's assume that we have all of this. The allocation base is direct labor cost. Okay, so our allocation base is direct labor costs. Versus direct labor hours. So we're not going to use hours, we're going to use direct labor costs. So how do we figure out cost? Total cost, expected cost for the year. Direct labors. Okay, so what do we start with? On the standard model, how many models are we going to make? 2,000. Okay. And how much is it going to cost us on direct labor costs? 88 times 2,000. So how much direct labor costs are we going to have for the standard units? 176, okay? Premium model. And how many units? Okay. 74,000, is that what you get? Okay. It comes from the book, right? Okay. 176 plus 74? 250. That is going to be our allocation base. That's what we're going to base our allocation on. It's the cost driver, okay? Now, we have an equation that we've already known. Predetermined overhead rate equals estimated overhead cost divided by estimated quantity of overhead allocation base. Cost driver, okay? That is our cost driver. So what's our equation then? What's our estimated MO? $100,000. What's our cost driver? Which would be? $250,000. That gets us 40%. Okay. So for every dollar of direct labor that we put on into either a premium model or a standard model, we're going to add 40% of that as manufacturing overhead. The other way you can think about it, for every dollar that we actually put in labor, we're going to add 40 cents, because 40% of a dollar is 40 cents. 40 cents of manufacturing overhead. Okay? Now, without going on to the next slides then, let's assume that we wanted to calculate on a per unit. So direct labor on a standard unit, what would it cost us? So standard model, direct materials. What is it costing us for 1 unit? 150. What about direct labor? And manufacturing overhead? How do we calculate that? .40 times what? Cost driver. What's the cost driver? What's the cost driver? Direct materials, direct labor? So go back to my example. We're going to add, for overhead, we're going to add 40 cents to every dollar of what? So we're going to add 40 cents or 40% of what as overhead? Which would be, what's our cost driver? Direct labor. Direct labor hours or cost? So what's our direct, so how do we calculate manufacturing overhead then? How much? Where'd you get 250? What's our direct labor cost for this one unit? 88. So for every $1 of direct labor, I'm going to add 40 cents in overhead. So how do we calculate that? Gets us? What's our total cost for this product? I know. No. So what goes into the cost of a product? $273.20. Okay. Let's go back. Do we understand why we calculated Mo the way that we calculated? Okay. What? Why do we calculate predetermined overhead rate? Why would you want to do that? Budget's a good answer. Almost there. So you need to know how much to charge. Okay? You need to know how much to charge. So we create this predetermined overhead rate to figure out how much overhead we're spending on these products. Okay? In this case, they said that the cost driver, what drives the cost of overhead, is the direct labor cost. Okay? So the way that we figure out predetermined overhead rate is we take the estimated overhead cost, which would be $100,000, because it tells you total manufacturing overhead is about $100,000, and divide it by our cost driver. What's our cost driver? Direct labor what? Cost. How do you calculate estimated direct labor cost? Take what? Well, how do we calculate the 250? So how much we expect it to cost, okay? We expect it, on the standard unit, it would cost us $88 per unit of labor, and we're going to make 2,000 units. And we expect the premium is going to be $148 a unit, and we expect to make 500. That's how we get 25,000 or 250,000. We estimate the overhead cost would be $100,000. We divide that by the estimated cost driver, which is 250, and we get 40%. So we are allocating 40% additional for overhead based on direct labor costs. What's our direct labor cost on one unit for the standard model? $88. Okay. If we're going to add to it 40% of direct labor costs, we get what? $35.20. Okay. What makes up the cost of a manufacturing process? Direct labor, direct materials, manufacturing overhead. So you add that up, you get $273.20. Do we kind of get it? Okay. Let's do the premium. What would the premium cost? What's our direct materials cost? Okay, direct labor. How we calculate manufacturing overhead? Times gets us total cost. Okay, so each premium model is going to cost us $407.20. Okay. This is a single rate allocation because it doesn't matter if we're using premium or we're actually, if we're allocating standard, we're still going to use 40%. Okay. This is going to change when we use multiple departments in that we might have a different rate for WIP 1 and we might have a different rate for WIP 2. Okay. So do you all understand this before we go up to the multiples? If not, there's homework too. All right, so now that we have our 40%, this is kind of the long-winded answer you could have done is now how do we allocate this $100,000 between the two models? Well, we have a predetermined overhead rate of 40%. The direct labor cost is going to be 176. The way I get 176 is take 2,000 times 88 bucks. We're going to allocate 70,400 to the standard models. Okay. Another way that you can think about that is if you took this 3520 and you multiplied it by 2,000, you should get 70,400. Okay. On the premium models, 40%. Actual quantity of allocation base use, 74,000. The way we get 74,000 is taking 500 times $148, which gets us 74. 74 times 40% is 29. The way that you can look at 29,600 is taking 5920 and multiplying it by 500. Okay? That gets us 100,000. That's my check figure. I've allocated all my 100,000 to both standard and premium models. Okay? All right. Any questions? All right, so if we want to take a per unit cost, we can take our total manufacturing overhead divided by the number of units that we expect to produce, and we get 3520, which matches here, and 5920, which matches over there, so we know we did the math right. Add them all down across the board, 273.20 and 407.20. So that's how we know we did it right. Okay? This is another way you can calculate it. Okay? All right, here's the problem with single rate. It's simple, but it's not accurate. Okay, and when we say not accurate, well, what happens if there's more skill over here on the premium, but let's say most of this is done by machines? Okay, well, more machines means what? More what? Possibly more overhead. Why more overhead? Depreciation, electricity. So there might be more overhead that should have been allocated here than there. And that's why we use something called a multiple department rate. Okay? Which means we're going to first estimate what the manufacturing overhead are in each department, okay, or even each product, and go from there. Okay? So this is a small modification from a single plant wide, and that we use different allocation bases. This is more complex, but it's more accurate. Okay? So the reason why this came about was they were trying to figure out, well, we have this single rate, but it's not as accurate. As technology got better, costs went down. Okay? So how do we be able to be more accurate in our pricing? Okay? Allocation process is the same, except there are multiple cost pools and multiple allocation bases. Assume that Smart Touch Learning Managers had compiled this information about the production department. In the production department, they expect that the standard model is going to use 15,000 machine hours for their standard model. They also expect that the premium model is going to take up 5,000 machine hours for total machine hours of 20,000 units, or 20,000 manufacturing hours. Smart Touch Learning also believes they can separate the manufacturing process into two main departments, the production and software. Now, let's stop here for a second. Production versus software. What's going to be the difference as far as machine hours and labor? Where would you expect more labor to be put versus more machine? More what in production? More what? Why more machine in production? Just common sense. Why would you have more machine? Okay, so what's a good example that we saw in class? So the Funyuns, the Frito-Lay. Were there many people working on the Frito-Lay line? No. No, so we might use a cost driver of what? Labor or machine hours? Machine hours, right? Because there really isn't any labor. So why would we want to allocate labor to the production area if there's no labor? Okay, so we might allocate, in this case, or use the cost driver as machine hours instead of labor. What about software? What would a cost driver be on software if you've ever thought about how software is made? Why labor? So machines can't make software, right? Now they make the discs, okay, or the cassettes, if you know what a cassette is, okay. The old Nintendos didn't have discs. They had cassettes that you had to blow on, and then you put it in and you blow. I'm dating myself at this point. But also fraud didn't happen with those, not like today. But software, you have to code. You have to know how to code. And coding requires a person to sit at a computer and just code and code and code. Which means we can't use machine hours for software. We really can't. It doesn't give us a better indication of what the overhead costs are using machine hours for software if a lot of it has to do with coding. Okay? So as we go through this, understand that point. So these are the steps that we need to use in a multiples department rate. Calculate the predetermined overhead allocation rate. So you've done this before, but we're going to do it for per department or per division. Use the predetermined overhead allocation rate to calculate the allocated manufacturing overhead cost. Calculate the per unit overhead rate and calculate the total cost per unit. All right, so here is our equation. Now I have to admit, some of these numbers I never gave to you. They are in the book, okay? I apologize for that. But in the production department, we have $80,000 in overhead, estimated overhead. How do we know that? Because that's given to you right here. $80,000 was allocated to production, 20 was software. Okay. Now, our cost driver in the production department would have been what? What did you guys say? Machine hours or direct labor? Machine hours. So we're going to use machine hours. In this case, 20,000 machine hours. Okay. We expect that it's going to take 20,000 machine hours to complete this project. Okay. In the software, what cost driver are we going to use? Labor hours or cost. Okay. I'm not telling you which one's right. I'm just saying those are the two options. You could use direct labor hours, or you can look direct labor costs. Doesn't matter. In the book, and this is one of the numbers that I didn't give to you, they use direct labor cost. Okay. Okay. So they use that as the cost driver. So there's 20,000 that was allocated to software. We get 20,000 divided by 31,250. That's a number that I should have given to you on this example. Gets us 64%. So when we talk about the production department, we're going to allocate overhead based on $4 per machine hour. Okay? So it doesn't matter which tablet we make. If we make tablet, the premium tablet, and we use 2 machine hours, we're going to allocate $8 in overhead to that premium product. Then when it goes to the software department and we actually put software in there, okay, we're going to allocate more overhead. In this case, we're going to allocate 64% of direct labor costs as overhead. Okay. So as we go down the process, we're going to add more manufacturing overhead. Okay. All right. So step 2 is use the predetermined overhead rate to calculate the allocation manufacturing overhead cost. So our predetermined overhead allocation rate was $4 for the production department. The actual quantity of allocation used was that 15,000 and 5,000. Remember this chart right here? Standard model, we expected to use 15,000 machine hours. Premium model, we expected to use 5,000 machine hours. Okay? So now we have to allocate that $80,000. This is how we allocate it. $4 times 15,000 machine hours equals $60,000. $4 times the 5,000 is $20,000. Okay. Have we allocated all $80,000 for the production department? Yeah. Okay. Now, this is another one where I should have given you numbers, but I didn't, so we're just going to go with it. Software department, what's our allocation rate? How did you get 64%? No, it's not in the book. You just did it. Okay? Now, these are the numbers that I said that if you follow the book, this is what I should have given you. So 22,000 would have given 14,080, and then 9,250, which would have given 5,920. This has to be given to you or some way to calculate it. Okay? I just failed to put it on my slides. Okay? What? Yeah, I fixed that this morning when I looked at it and saw it was wrong. Okay? So 64%, $20,000. Have I allocated the $20,000 in the software department? Absolutely. Okay? Step 3 is now we can add them all up. What's our cost per unit? Well, we had 60,000 in the production and 14,840. Those numbers come from here. 60,000 plus 14,840. So our overhead is 74,880. On the standard model, how many units are we going to produce? 2,000. Okay? 2,000 gets you $37.04. Okay? That's the overhead that we're going to allocate per unit in the standard model. On the premium model, what was our overhead for production? 20,000. What about our overhead for software? 5,920 gives us a total of 25,920. How many units are we going to make? Which gives us a manufacturing overhead cost? 5184. Okay. Now we can figure out our total manufacturing cost like we did here by adding them all up together. Okay. There's our new rates. What's the difference between this and the single rate? What do you notice? Single rates are on the board. Multiple rates are on the screen. What do you notice? Are they exact? They're off, but it doesn't give us exact, right? So what we're trying to do is here be more exact. That's what we're really trying to do here. 407.20 is a good number. It's a really good number. Okay? But 399.84 is even a better number. At least we assume that what we're doing here makes us a better number. Okay? Here's our differences. $1.84 on the standard model, $7.36 on the premium model. But remember, small differences here make a big difference later on. Okay? Here's a financial planning assessment. Let's say you started to save $100 in a bank account or $100 in the stock market at the age of 18. Okay? You would have only need to put, from the time you were 18 until you retired at 67, $100 in your bank account every year, and you'd make $1 million, or you'd have $1 million by retirement. Contrast that to if you started at 25 when you first get your job, you will need to put $254 just to get to $1 million. So how many year difference was that between 25 and 18? So just because you didn't do it for 7 years, you now have to put almost double, or actually 250% more, just to get the same amount of money. That's what we're saying here. $7.36 may not seem like a difference, or $1.84 might not seem like a difference. But if you're making millions and millions and millions of products, it makes a huge bottom line difference. Okay? Like here, if you use single, you would have said $273. So let's sell it for $280. Okay? You would have made $1.84 less than if you had the right numbers in place. Okay? So we're trying to get more accurate with this. That's why we're doing this. Okay? Now, I see a lot of people that have their books. Does it help you to have your books and go through this? Okay. So maybe you should bring your books if you have them. Okay, good. Okay. I do need your test back, so make sure you paperclip them back. If you want to take your open-ended, you can take your open-ended to fix them. They are due on Monday, first thing of class.